This is what's called a narrow sideways channel. And whatever sort of direction we break on the other side of the channel, you just go with that trade. And I think that's now it's that, that, and that. What are we supposed to think if you ever see the market smiling at you? Ooh, look at that. United Health Group Incorporated. Wow, that is an interesting looking talk. What the hell's going on here? UNH. We were actually, if I'm not mistaken, I think we were thinking bullish of this thing a while ago. Nothing startling here. I think if I'm not mistaken, maybe we were thinking top. I mean, there is a really pretty M top there, eh? And probably what's happened here, there to there. There we go. All right, so off of this M top, boggies take us back down into these lows here. This to me looks like a reload zone play. Yep. Filled the gap. Just with a wick though, so not really a solid fill there. And then is that, oh, Mountain Man rallied up into that. And so that's what the little chart is showing us, is this war going on right here. And actually, this would be good trivia for you. Who can tell me what is this particular chart pattern called? Make it nice and easy for you. We'll go boom and well, maybe we'll go boom there. What does that look like? This actually is a good example of a situation where you could buy like a straddle. So you're going to buy maybe like, and of course the stock's way too much money, but nonetheless, buy like, say the 520 call. And we'll buy the, I don't know, maybe like the, well, I'd rather be a little closer. But anyway, it's not that big of a deal. 490, we'll say. Put. This is what's called a narrow sideways channel. And whatever sort of direction we break on the other side of the channel, you just go with that trade. And I think that's now it's that, that, and that. What are we supposed to think if you ever see the market smiling at you? And if you wanted to keep it really simple and not say, you know what, I'm not going to predict which way this is going to go. We've gone sideways, so the option premiums probably have come down as the implied volatilities come out of the options. And I'm just going to go buy a 520 call and buy a 490 put. And, you know, that theoretically, well, actually, I don't even know. We could just do a quick boo. Maybe something like, I don't know, maybe like in October or something like that. Give you a good 60 days to let the trade work. Probably as you get to like 30 days, you probably want to roll this thing out. So basically, it buys you a full month in this trade. So the 520 calls right now, actually not that expensive, 9.25. Yeah, we'll just say for simplicity, 9. And the 490 puts, they're going to be expensive. They're 13. I'll say 13 and a half. And that makes sense. So when we were in the channel, they were probably equally priced. The fact that we broke means that the puts have gone up in price. But long and short of it here, your total cost, we'll say narrow sideways channel, and then we'll say straddle total cost is what, 22.50. So that means that to break even on this trade, this is assuming that you're just going to ride the other side to zero. We don't necessarily have to do that, but 22 bucks. So from 520, we want to see 542 and a half. And then conversely, we want to see 470, 468, 467. Okay, so to break even on this trade, we just need to see either the price above that level there or below that level there. So let's see what happens over the next month. This will be an interesting experiment. I have no idea what's going to happen here, but my hunch is over the next month, you're going to see the market either above or below these levels. So let's see what happens. In fact, if the market comes down and fills in this gap, and let's say it just even goes to there, then the stock's 450, the 490 puts will be worth $38. $38 from 22 is a profit of 16, which is about what is that? 16 divided by 22. roughly 72% return on your money. That's not bad. If this is a bull ABCD, boom, 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 which it doesn't look like it is. Looks like the puts have won the battle here. But let's see what happens. From there to there, that would have made the target there 565, so the option would be worth 40 bucks. So it's interesting how the narrow sideways channel, if we break back down and fill in the gap, then the option's worth 40 and change. If we do the AB equals CD target, which I think is off the table now, but nonetheless, when you put the trade on, you didn't know, that would mean the call would be worth 40 bucks, or basically at either extremes, that's about a 60-70% return. So that's not bad. Not bad at all.